stocks trade near record highs, there's one key area of the market that's been sitting out this rally. The S&P 500 has gained around 9% this year, but the IWM, that's the ticker for the Russell 2000 ETF, which tracks small caps, is down close to 6% on the year. But our next guest says there's still some big opportunity brewing in that small cap arena. Let's bring in Nancy Prial, Senior Portfolio Manager at Essex Investment Management. Nancy, thank you very much for joining us tonight. Let's talk about the small cap story. A lot of folks used to say it was a leading indicator of things. It doesn't seem to be these days. What's the story with small caps?
Well, there are two things with small caps. One, of course, is earnings growth, which matters for all stocks. And until recently, small cap earnings growth has been lagging the big companies, particularly the big companies that we've all been talking about, like the FANG stocks. However, one thing I would point out is that coming out of 08-09 and into the mid-2014 era, those large cap stocks were actually much cheaper than their smaller cap stocks, despite the fact that earnings growth was faster. Today, we have the opposite. The smaller cap stocks are significantly cheaper than their larger cap stocks. And coming out of the second quarter, we've seen greater earnings revisions on the smaller cap side. We think that sets the stage for a big rebound in small cap stocks. And we're particularly excited about small cap companies that are growth companies that are just selling at valuations.
All right. So, Nancy, I was wondering, we were just showing viewers out there and listeners, if you're listening on Sirius XM right now, the chart we just showed was basically the performance of the S&P 500 alongside the Russell 2000. It was tracking very closely up until the pandemic lows, and then there's been a gap. So, Nancy, I wonder then, from a standpoint of COVID-19, how much was the virus pandemic the story here? People wanted to focus a little bit more on those quote-unquote safer large cap names as opposed to the ones with smaller valuations that could have more risk.
Right, and that was very much a part of it. And so what we saw in those lovely 18 or 19 days in March is that liquidity and market cap really were determinant of performance, and investors were rightly taking shelter in companies that were perceived to have better balance sheets, more stability, perhaps safer prospects going forward. Now, small cap stocks have had an extraordinary move post that sell-off after the market bottomed on March 23rd. But math being the way it is, even with that strong move that has outpaced many of the larger cap sectors, they still haven't quite caught up for the year. Again, we believe that they will follow earnings growth. And so as those earnings come through and as earnings prospects improve more broadly for more companies with a resurgence American economy, that will bode well for the small cap sector.
All right. It is fast money. We talk about stock picks. We can't let you leave without giving us some of your own. So, Nancy, as you look at your portfolio, which types and which small cap companies are the ones that will lead this rally, so to speak, in small caps?
Right. So we're looking for growth stocks, but we want growth stocks that are selling at prices that do not reflect their future growth prospects. We're looking for companies that are innovators. We're looking for companies that can gain market share. Some of the areas that we like where we're seeing very disruptive technologies are the area of ed tech, fintech, some of the e-commerce, as well as a lot of work that's being done, particularly in personalized medicine. I have a few picks that you can see up on the board here that play off of those names, and I'd be happy to talk about any one of them.
All right, so what we've shown here is Pluralsight, Elf Beauty, and Fulgent Genetics. Those are the stock picks for Nancy right there.
Yep.
Nancy, thank you very much for joining us with everything that you've had on the small cap story. We appreciate it.
Thank you.
All right, Guy, you've pointed out the underperformance of those small cap stocks. I mean, how much does it worry you to see the Russell 2000 underperforming the S&P by as much as it is right now?
Yeah, well, I think you have to understand. I mean, I wake up worried, so it absolutely worries me. And it's, you know, the IWM, which measures obviously the Russell's probably up 65% or 60% since that March low, and it's still nowhere near that 172 level that it topped out. So that's concerning for sure. And you know, I'm all for the resurgent U.S. economy. I just don't really see it happening for a myriad of reasons, you know, not least of which we still seem to find ourselves smack dab in the middle of this pandemic. So I understand why one would want to be bullish of small caps. I just don't see the environment for it. I will say that Elf is a pretty interesting company. They just signed a deal with Alicia Keys, I believe, in the beginning of the month, which got the stock back to this 19.5 level, which it topped out at. A close above 20 for you technicians out there, of which Carter Worth is one. And I think this stock is set to make another new high.
All right, so Carter, let's kind of round out the discussion here with you. Were the charts telling you anything about whether or not that small cap story plays catch up with the large caps?
So I think the point of picking a good growth name, small cap, large cap, doesn't matter, but it's really about the weighting of the Russell 2000. We know, right, that the Russell 2000 weighting in financials is 21% versus the S&P at 10. So you're so dependent on all of those banks, all of which who are struggling with their C&I loans, all of which are getting no interest margin on their lending. That's one of the issues. The second, of course, is the weighting in tech. The Russell 2000's weighting versus the S&P, it's 11%. The S&P is almost 29. So you need things to go right, which as of now, you've got a weighting issue that almost make it impossible for the small cap index itself to catch up unless tech collapses in the S&P.